Today is Thursday, March 10th, 2022. This is the daily trade wrap-up. The best play I had today was the Australian dollar. Coming into today, we had a nice uptrend on the daily, and then we had a down bar here, and this is an inside bar. So typically after such an ugly down bar, you wouldn't want to buy a violation that happened the next day. Luckily, we got a day of rest in between, set up a green bar, and then we can use this as our setup pattern. Taking it down to a 5-minute. So what was interesting is, if you remember, yesterday's high was a green bar which was inside the previous day's high. The high from the day before, which ended up being the stop for our short, overnight short, was 73.49. And that didn't get violated until 6:50 in the morning. So although we had all this action above this green line, which is the previous day's high, that is just the second bar in the inside bar pattern. So it wasn't until here that we'd want to start looking. So the first test got rejected pretty fast, and it's just in one leg went up and in one leg came down. And then this big bar was on the CPI release this morning. And then if you look at that, we have I guess it's an inside bar to this, so it's also considered an up bar. This is considered a down bar. This is considered a inside, so it's down. And then here, this low was 39, this low, it was also 39, okay. So it didn't actually break down, so it is kind of still a hoagie if you looked at it that way. I was looking at it as just this bar structure here within the hoagie, which I'm starting to realize happens pretty often, where I believe it was it gold or natural gas the other day, where there was a 30-minute chart and the entire ABC came within the hoagie except for the last bit of the C poked out of the hoagie. And that's kind of the same setup we have here. We have this down, up, and then all of these are down bars. This one's outside, this one's inside, this one's down, this one's inside, this one's down, this one's down. And we do finally poke out of the hoagie on these two bars right here. So from this high, we have one leg, two leg, three leg. And this also gave me an idea. I haven't implemented it yet, but I want to see the slope of the first down leg and the slope of the second down leg. And my hypothesis would be that, the ratio of this slope to that slope, if it's below, a half or some metric, that might signal a better setup than others. Because you want to see that the downside momentum is slowing down, as it is here in this second leg. So this became our risk bar, and this risk bar is very tight. I believe it was 5 ticks on the Australian dollar. So 39.50 against 34.50. So you bought 40 with the stop at 34. So 6, including your stop level. So 59.95 right here, is where you get 4R. Right here we got 4R in about an hour. From the entry was 8:35 to 8:40, so 8:40 to 8:45, and you're out by 9:20. Less than an hour, 4R. I took some off there, and then I took some more off at 6R, which was 5R, which was 64.5 up here. I just got tired of waiting. I don't like carrying a lot of overnight positions, so I wanted to lighten up. But I am holding a little bit for a bigger move. I think this low here is pretty secure. I'll see if I regret that or not tomorrow. Then another setup showed up in natural gas. And again, let's start with the daily chart. And, this is a series of higher lows. And it looks like it has the potential to go parabolic. If I could draw a curved parabola here, you could see, it's also called a French curve. You could see that there's probably a French curve that fits this with the parabolic prediction here, or parabolic guidance. So when we had this test and fail back here, this set up a really good short trade. I believe it was 6R intraday that day. Since then, it's been a couple of days where things have matured. And, one thing you can do, and I'm going to look at this too, is looking at the Taylor trading method, which was popularized by Linda Raschke. This, basically your 2-period rate of change bottomed on this day, and then we made a lower low yesterday with without more momentum. So that sets up a Taylor buy day. And I think really tomorrow would probably see the big move. I'm targeting just right into this pocket right here. What is that, 480.6? So it might be, probably have my offers out just ahead of 480. And that's just another confirmation of the rhythm. And so here, I was looking for that violation of the high, and we got it at 3:30 a.m. So during the European session. So given that it happened so early, I started looking at a 30-minute, and we got this move down here, this move down here, this move down here. Let me blow up the bars so you can see exactly the rhythm there. And then this being an ugly big bar had a green bar within to help soften the blow of this bar to make this combined pattern a good entry trigger. Now, it broke this at 8:30 in the morning, and I knew we had EIA coming at 9:30, so I really just wanted to wait to get halfway into this big range, because this is a big range. We have an event coming. EIA is the inventory release that happens every week, and so I figured there were good odds to get that, so I did. And what that's going to allow me to do is half my risk so that my multiples come quicker. You can size it up and your multiples come quicker. So, pretty much 1, 2, possibly 3 at that high, but I am holding for a more significant move here. And then just, as an aside, during the afternoon, was this the pattern? There we go. We, off of this impulse that came out of nowhere, we had this pullback, and then this was of, 1, 2, 3, 4, 5, 6, 7, 8 or 9 bar hoagie before we kind of poked above and started testing above. And it's also kind of a nice hoagie where we didn't really test the bottom. It's, it's almost like a, triangle, with higher lows on this side and a flat top over there. This is generally not a liquid time for natural gas, so we will see. And natural gas does typically like Fridays. There's sometimes fear about weekend supplies, so people will go ahead and bid it up on Friday to make sure their weekend is taken care of. So those are the two trades that were of the 4X variety, which is our bread and butter trade. And just another interesting one that I saw today, I was able to catch a little scalp on, is the U-turn. The S&P gap down, and it's been weak most of the day. Well, coming off of low of the day, this is a 5-minute chart. Let's say this is a down bar, inside, outside, so that would also be a down bar. That's the beginning of your move. Up, 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 up. These are all ups because this one is, let's see, 42.20, so the same low and one tick higher, so it's still an up bar, I guess considered an outside bar. And then this one is definitely a down bar, and then this is an up. So we had an A, B, C. So when you take out that A, B, C later, bam, got a pretty big move right off of that. So again, that is the simplicity of a U-turn. I start my counts at the low of day, wherever the low of day may be. This is a little early in the pit session, but let's see, when do we start making low of days? We started making low of days here. Here we just got one leg up. And then off of this leg we got 2 legs up, and then we got what looks like 1 leg down, and then 1, 2. We just started. This starts just waving around, but this part is not relevant. It's the one off the low that matters. There's our U-turn point. Set that for a buy stop and catch a little something. So anyway, that's it. Pretty simple day today. Was kind of a choppy market overall. Watched a couple of equities, but nothing too exciting. Tomorrow, if we look ahead to what's setting up, the euro has a very nice setup bar for a short. So if we take out this low overnight, we'll have our Forex trade set up on a certain time frame depending on when that happens. Another thing that has potential is gold to the long side. Again, we're in a very big uptrend. We just had one down day. Now this would be a very reasonable bar that if we were to take out to the upside, we could have our little two-leg pullback on a smaller time frame. And when we look at the indices, it's kind of a breakout mode here. I mean, in general, there's nothing all that inspiring. But having an inside bar like that could make for a good setup on a break above the previous day high. This is the S&P. This is the NASDAQ, ENQH2, NASDAQ, and the Russell. And I guess to me the Russell seems a little more inspiring than the others. The only caveat is on these, when you look at the Taylor rhythm, we already had, the market gave it all it had to the downside here, and then we flipped momentum, had an up day. This would be a day to sell above the high. So I don't know if it's a day where we're going to have a lot. If we get a tight enough pattern, it might be a good one to take, for at least 2R, maybe 4R. But it's probably not one to let run like natural gas. And all of these indices have the same rhythm. After 2 days, these dots mean the market ought to give it, as much as it can to the downside. They're called PF3s. Again, a term that Linda created. It has to do with the slope of her oscillator, the slow line, the fast line, and the ROC itself. So all three oscillators are pointing down, which is when you can get the most to the downside. And then momentum slowed on this day. We had our up day. Tomorrow's just supposed to test up and then and then be done. It may not roll over on the same day. It may just test up and hang out, and then that would set up a good short for Monday. That's probably a good target there. Wonder if 43.40. Yeah, I was kind of looking at 43.24-ish. But yeah, it could be anywhere in here, 43.20 to 43.60, depending on how far we go. We'll wait and see. So again, I like to order the priority, and for me, the euro is going to be the best setup if we get a short, and gold is going to be the best setup if we get a long. And then only if those don't fire and don't have my capital allocated, then I'll look at the index potential trades. That's it. Have a good evening.